Hey guys, I wanted to get on here and give you guys an update for today. First win of the day, client from out of state, moving from the West Coast to here in Knoxville, Tennessee, reached out, had some questions. Turns out my number had gotten passed on to them through a friend of a friend, something like that. And so I thought that was really cool. I said, it's really cool when, people are passing on your information and they grant you that trust. And so that's a win. Happy to help them. Had a conversation with them while I was speaking to them about a potential pre-approval. I thought this would be a good time to get on here and just give back a little bit. So oftentimes, guys, I'm posting maybe a picture at a closing or something. We celebrate with the clients. Part of it's we use it to market and advertise our business too. But really, we're excited for them. And I also want to give back at times and try to do more coaching moving forward. So this is one of those opportunities. So while I'm on the phone with this guy, we're going over numbers. And by the way, this happens all the time. I mean, I get this 5 to 10 times a week or a handful of times a week where I get this call where people are wondering what potential mortgage payment looks like, potential pre-approval amounts look like, right? We're not always pulling credit, getting all the documentation, pay stubs, W-2s, tax returns, mortgage statements. We're not always gathering all that right away without a consultation, right? Beforehand, we have a little chit chat, we have a little talk, kind of see where we're at. So what I wanted to share with you guys today is what goes into that. So in terms of a pre-approval, people always ask how, they want to figure out how much they can get pre-approved for, or the purchase price they had in mind. So what I wanted to let you guys know is when we start off with an approval amount, we don't start off with the purchase price or the home price in itself. We start off with your monthly earnings, right? So when you want to borrow money, one of the factors that will determine your ability to repay outside of credit is your income. So we look at that monthly qualifying income. So let's say you earn $8,000 a month, okay? Let's say that's a baseline. Well, in our world, we usually can approve you for total monthly liabilities up to half that number, okay? So if you earn $8,000 a month, okay, cut that number in half, very simple. We can approve you for up to $4,000 of total monthly debt. Now here's the catch, here's the thing. We're factoring in all your debt, student loans, car payments, whether installment debt or leases or credit cards, anything that you pay in terms of a monthly obligation, that number is cutting into your approval amount, right? So once we have that 50% threshold established and we look at all your other monthly liabilities, what's left is what we can extend you in terms of financing or a total monthly housing payment. So hopefully you're following, but in this scenario, we said, make it $8,000 a month. We can only extend financing. Typically, most lenders will only allow you to borrow up to 50%. So, if you got a ton of other debt, that's going to eat into that number, right? But, so in this scenario, let's say the monthly debt is capped at $4,000. Well, you have an $800 car payment. You have a $200 credit card. You have student loans for $500. Okay, that's $1,500 of monthly debt. So we cut that $1,500 from that $4,000. You're left with $2,500. Now that was kind of a lot to follow, but that's the number that's left that we can offer you for financing. So oftentimes, the pre-approval amount is not just tied to your income in itself, but it's also tied to your debt. Some people make a ton of money, but they have debts that are eating into that approval amount, right? That are pretty much eating up all their potential financing that we could offer. So long video, but educational. Hopefully you guys were able to get something from that. So if you have a scenario where you want to run your numbers, obviously call me, but you can still run some hypothetical numbers in your head. Hey, I earn about $5,000-$6,000 a month. Okay, well, that we know that a bank's only going to allow you financing for up to half of that. So $2,500 to $3,000, but I have $1,000 worth of monthly debt on my own outside of the potential mortgage payment. So you're left with the difference. That's hypothetically what we could approve you for. So thanks, guys. Have a great one as always. Bye.